Welcome to the monthly report from the world of finance and economy. In this video, I will provide you with important news that affects world markets and the economy. My aim is to bring you relevant information and help you find your way in this complex world of finance. I hope this video provides you with useful information. If you want to support this channel, you can find the link in the video description. First, let's look at the financial news from America. This passage provides a snapshot of the current financial situation in the United States, with news about the earnings of First Republic Bank, concerns about the stability of the US dollar as the world's main reserve currency, a dire prediction for the world economy from Harry S. Dent, and data on the slowing growth of the American economy and inflation rates. The article also includes comments from businessman and author Robert Kiyosaki and entrepreneur Elon Musk on the potential threats to the US economy. Earnings of First Republic Bank, apparently the most endangered of the regional banks in the USA after the March collapse of Silicon Valley Bank, Silvergate, and Signature Bank, attracted a lot of attention. However, First Republic Bank, which received $30 billion of aid in the form of borrowed liquidity from the largest American banks, did not please investors. Indeed, deposits in the first quarter of 2023 fell by 41% to $104.5 billion, which is the information that resonated the most among investors. The Federal Deposit Insurance Corporation is approaching banks about their interest in buying First Republic, according to a person familiar with the matter, suggesting to this person that regulators intend to seize the San Francisco lender soon. The FDIC is approaching some of the same banks that came to First Republic's aid in March with $30 billion in uninsured deposits, this person said. These banks were reluctant this week to provide a second rescue, fearing First Republic would be seized anyway. Yahoo Finance has learned that JP Morgan Chase and Bank of America, the nation's two largest banks, are weighing potential bids following a government takeover. The FDIC has set a 12 p.m. ET Sunday deadline for offers. The Wall Street Journal reported Friday that Pittsburgh-based PNC, the nation's sixth largest bank, is among those considering a bid. Representatives for JP Morgan, Bank of America, and PNC declined to comment. Harry S. Dent, who is the founder of HS Dent Investment Management, made a dire prediction for the world economy. The author of the 2009 book The Great Depression Ahead, which appeared on the New York Times bestseller list, claims that between now and mid-June there will be a stock market crash so big that everyone will suddenly realize that it's not just about a big correction, but that it is a crash the likes of which they have never seen in their lives. According to Harry Dent, the collapse of financial markets that occurred after the financial crisis of 2008 and 2009, during which the S&P 500 fell 57% from its previous all-time highs, was saved by central banks that started printing money in an unprecedented way and also cut interest rates in an unprecedented way. So the recession didn't really do the job and didn't flush out the biggest debt bubble in history, he described 2008 and 2009. In his opinion, therefore, the crisis that comes now will be even worse. He predicts up to 86% decline for the S&P 500 and 92% for the Nasdaq. Bitcoin will fall by 95 to 96% from the maximum. Dent explained that the crash he is predicting has not yet come because central banks literally declared war on recession in previous decades. They never did it before, they said, we will not let the economy fall. However, according to Dent, this only delays the inevitable, and the Fed, that is, the American Central Bank, will ultimately not be able to prevent this collapse. Dent then added that what is being drawn now will resemble the years 1929 to 1932, which are associated with the legendary Great Depression. The rise of China as an economic powerhouse in global trade in recent decades has raised concerns about the long-term status of the US dollar as the world's main reserve currency, which it has been since the end of World War II. Before World War II, Britain held this status. These concerns arose mainly from the recent agreement between China and Brazil to start trading in their own currencies instead of the dollar. China is also beginning to use the yuan in commodity trades with trading partners. Brazil and Argentina are also exploring the potential of a common currency. Businessman and author of the best-selling personal finance book Rich Dad Poor Dad Robert Kiyosaki recently issued a dire warning. He believes that America will probably witness one crisis after another when the BRICS countries begin to get rid of their dependence on the dollar. The BRICS countries, Brazil, Russia, India, China and South Africa, have already started working on the gradual transition from the dollar to other currencies. Robert Kiyosaki made his statement on his channel The Rich Dad Channel. There, he warned that the US was currently at risk of hyperinflation, war and famine as other major economic powers came together to challenge the supremacy of the US dollar as the world's reserve currency. According to Kiyosaki, BRICS represents a major threat to the stability of American society. An alliance of nations could launch a hyperinflationary attack on America by sending their vast dollar reserves back to the United States. According to Thursday's GDP data, the growth of the American economy slowed sharply to 1.1% year-on-year. The data thus indicate that the American economy is headed for a recession, which even the Fed did not rule out after the last FOMC. The credit crisis also contributes to this, which reduces liquidity and puts many businesses in trouble. Month-on-month CPI grew by 0.1%. Year-on-year CPI reached 5%. The data showed that although inflation is still well above the Fed's 2% target, rate hikes are contributing to its cooling. Elon Musk responded on Twitter to a video shared by Peter St. Onge, in which the analyst claims that the dollar is losing ground faster than people realize. If you use currency as a weapon often enough, other countries will decide to stop using it. Elon Musk responded to the arguments used in the video, with which he de facto agreed. Dollar's share went from 73% 2001 to 55% in 2020. Went from 55% to 47% since sanctions launched on Russia, now de-dollarizing at 10x faster than the previous 2 decades. Data on manufacturing activity in the US slipped deeper into the contraction zone, below the 50 points that separate decline from growth. The new numbers put the ISM Manufacturing Index at 46.3 points, which is worse than in February, 47.7. This index, also known as the Purchasing Managers Index, is based on a survey of purchasing managers in more than 300 US manufacturing firms. It is considered a key indicator of the state of the US economy. JP Morgan Chase CEO Jamie Dimon says that the consequences of the banking crisis, which manifested itself after the collapse of the 3 American banks Silicon Valley Bank, Signature Bank and Silvergate and after the rescue of the Swiss Credit Suisse, will last for years. Easing Fed policy is not necessarily good for markets, and the history of crises confirms this view. All these years the Fed eased monetary policy due to a weakening economy. Despite the interest rate cuts, these were relatively bad times to buy stocks, and basically all of these cases led to a market decline of at least 15% to 20%. There are even more cases like these in the past. Now let's look at the situation in Europe. Recent economic news in the European Union has been mixed, with some positive developments and others raising concerns. Inflation in the EU fell to 8.3% year-on-year, according to Eurostat, which is the lowest figure since May 2022. Inflation in Great Britain reached the level of 10.1% in March. According to Eurostat, the prices of apartments and houses fell by 1.7% between the last and the third quarter of 2022, which was the steepest decline in 14 years. The pace of annual growth also dropped significantly to 2.9%, while after the third quarter it was 6.6%. Investment in commercial real estate in Europe fell to an 11-year low in the first quarter of 2023. The office has sold the least since the creation of these statistical records. The report is important as the real estate market and commercial real estate are a new target for financial stability concerns in both Europe and the US. Vladimir Putin said that the Russian economy is resistant to sanctions and Russia's income from the sale of oil and gas is increasing. The inflation rate in Russia fell to 3.5% in March from 11% in February, year-on-year. The numbers were distorted by last March, when consumer prices rose sharply after the Russian attack on Ukraine. Strikes continue in France against the government's pension reform. Inflation in Hungary reached 25.2% year-on-year. This is a decrease from 25.4% in February. However, inflation here is still the highest in the entire EU. The ECB warns of signs of vulnerability in European real estate markets. Analysts at Citigroup have warned that shares of real estate firms could fall by 20 to 40% between this year and next. However, the risk of a real estate market crisis is not only a problem for Europe, but is said to be even greater for the US. The EU wants to support the production of chips within the European Union with the amount of €43 billion, thereby doubling its share in global chip production to 20%. In this area, the EU has been lagging behind global competition for a long time. The European Union is preparing legislation to regulate artificial intelligence. This should concern, for example, the regulation of facial recognition technology in public. The EU could be the first to come up with some form of comprehensive regulation for this fast-growing segment. Germany will increase the salaries of 2.5 million public administration employees by 5.5% and pay them an extraordinary payment of €3,000. And finally, we look at financial news from Asia. Here is a brief summary of recent financial news from Asia. OPEC Plus announced that it will cut oil production by 1.16 million barrels per day, which significantly boosted the value of oil on world markets and raised concerns about the fight against inflation. China is reassessing its approach to private firms, which it will support more. The private sector has suffered under the influence of harsh regulatory interventions in the last 3 years. Chinese companies account for half of the country's tax revenue and more than 60% of production. New Bank of Japan Chief Kazuo Ueda stressed the need to maintain the Japanese central bank's ultra-easy monetary policy, but said it was prepared to raise interest rates if wage growth and inflation rose faster than expected in Japan. Ueda stated that it is appropriate to maintain the current yield curve management policy of the central bank and also the policy of negative interest rates. He added that the Bank of Japan can also achieve its 2% inflation target in this way. House prices in Singapore rose 3.3% in the first quarter, up from 0.4% in the previous quarter. Land prices rose by 5.9%. Singapore is trying to fight the fever in the real estate market by raising taxes. The share of global automakers in the Chinese market is falling sharply. In 2020, they had a 61% share, while currently it is only 41%. A big drop occurred especially at Nissan and Honda, while Toyota is relatively holding its own. India's central bank kept interest rates at 6.5% and did not raise rates for the first time since April 2022. Only a minority of economists expected this step. Most expected an increase of 25 points. The Chinese central bank POC left the main interest rates for 1-year and 5-year loans at 3.65% or 4.3%. Again, it did not change them and keeps them at the same level from August 2022. The 1-year rate affects new loans, while 5-year mortgages. Warren Buffett, CEO of Berkshire Hathaway, admitted that a significant part of the position, 86%, in TSMC was disposed of due to geopolitical tensions. However, he described the Taiwanese chip manufacturer as a well-managed company. Apple has opened its first brick-and-mortar retail store in Bombay, India. He will open the second one in Delhi. Apple wants to focus more on the Indian market, diversifying away from China, on which it is heavily dependent. Apple CEO Tim Cook identified India as a key market for Apple going forward. India is the 5th largest economy in the world. If you are interested in multi-level marketing or want to buy some products or support this channel, there is a link on Amway in the video description. If you like the video, give it like, subscribe and turn on the bell. And don't forget money is freedom. And keep learning.